Hello, in this presentation we will create an invoice that will be populated by a bill or check created in the past. In other words, we entered a bill or check in the past and will now use that in part to create an invoice within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are with the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to be entering an invoice and populating that invoice with information entered in the past in a bill. We're actually going to be doing this with an inventory item we paid for in the past, which is a little bit tricky, a little bit different online than on ground. We're going to go through the scenario first and then see what we have. In order to go through the scenario, I'm going to select this drop down up top, the plus arrow, giving us most of the functionality in a quick window. And we're talking about this idea that we paid for inventory for a particular client, and we want to track that inventory and use the original document, which in this case is going to be a purchase order, to help populate as many documents as possible going through this process of buying the inventory for a particular customer and ultimately selling the inventory to that customer. So the process then was that we can imagine a customer coming into the store, ordering a custom guitar, something like a different color or something that we don't have in the store. Then we're going to create a purchase order for this particular vendor. That would be this item here, requesting from the vendor to send us something. No transaction related to this. All it's going to do is say that please give us a guitar and we'll pay you when it gets here. We're not putting the inventory on the books. We're not putting any payment on the books. Then when we get it, we're either entering a bill and or check at the point of time that we receive it, recording the fact that we now have it, and the inventory will be increasing, and we'll either pay it with a check or enter the bill related to it. As we do this, we're going to link this up. We're going to be able to populate this bill or check with the purchase order because it'll link up. Then we're later going to give that inventory to the customer with an invoice in this case. And as we create the invoice, we would like to link that up as well and have the invoice then pull over this information. This is how we're going to end up doing that. Let's take a look at the actual check here, and then we'll be able to look at the invoice as well. To do that, we can go first to reports. We're going to go to the reports on the left hand side, and we're going to look at the balance sheet, and I'm going to go back into this check. So we're going to look at the balance sheet, and we're going to change the date range to the month that we are working in, which is January of 2021, 01/01/21, 01/31/21, so January 1st, 2021 to January 31st, 2021. We're going to run that report. And really, I'm going to look at the inventory items because we're tracking a piece of inventory, and we purchased the inventory, so we know we can find it in here. So we're going to select the inventory items, and we're looking for an inventory purchase that we made. And this is the one I'm looking for. This is a check that we wrote for Gibson. So if we look at that, I'm going to open that up. Then we see this information here, and if we scroll down, we can see that we bought the inventory item and we made it billable. We checked it and made it billable. What that's going to do is it's going to link it up. It's a little bit different from the on-ground version that'll basically be able to link this up all the way from the purchase order to the payment to the invoice, but it will pull over. It will pull over imperfectly because this is the cost. But it will at least give us an indication that, hey, this is the actual guitar that was purchased. This is the one you need to basically ring up here. However, we are going to have to change it. We have to adjust it a bit when we make the invoice. So what's going to happen is that when we make the invoice, it's going to pull over the same information. This same guitar will be pulled over, however, at cost, which is not what we would like it to do. And we can see that this is also linked. If we see the link right here up at the top, we see it's linked to this purchase order. So this is the original purchase order we made, and we're linking it all the way through the process. So to do that, we're going to close this back out, and we're going to go to the sales on the left-hand side. Now we could find this, we're just going to enter an invoice now. We could find the invoice up top with this drop down as well and go to the invoice. When I go to the invoicing, I like to go to the side panel to see a little bit more detail on the invoices, and then I go to the top tabs to invoices here, and then I enter the invoice in this window, new invoice. So we're going to create a new invoice. And this invoice is going to be for the customer music store stuff, and that's who was listed on both the purchase order and the check that we just wrote. To see the customers, we can select the drop down and or type in music store stuff. There is music store stuff. If we tab over, we see it, then it says that we have this item pop up and say, hey, there's a billable item for that person. Would you like to add that to your invoice automatically? Meaning we have nothing included now. If we say, yeah, I want to add that to the invoice, then it's going to populate that automatically. It'll pick the correct guitar and everything. We go down here and it's linked up. So now we linked it up from the purchase order to the payment to the invoice that we're creating. Problem here, however, and this is a bit different than kind of the way the on-ground version is linked up, it's that this pulled over as if it was just any expense. It pulled over at the cost, what it cost us. And what we want is the sales price. So this will be good to link it up. It'll show us exactly the kind of inventory that we want, but we need to be very careful to make sure that we pick up the actual sales price if we were going to use this method. And as any other changes will come up, I'll see how to link this otherwise. If we don't use this method, then we just need to make sure that we're picking up the correct guitar, type in the correct guitar, and we won't have this kind of linked option there. So to fix this, to make that the correct price, double check it down here. I'm just going to say this is a GSB, and I'll type it in one more time. It's a Gibson, and that'll give us the actual price, not the cost. We can also go to the list of the item list to find that, but this is the quickest way to kind of see that on the same form. And we need to just basically change this from 598 to 777.4 tab. And that's just a quick way to fix this link and still have that link available. Then you're just going to delete this item here, and there's the item. So the item has always been correct. It was on the books at cost, at the expense to us, not the sales price, what we actually want to charge the customer. We can see that by just making another one of the same item to note the sales price and then record it, and then we can populate this information. The rest of the invoice is going to be the same as other invoices. Invoices are difficult to do, however, so let's go through it. They're pretty easy to data input, but they're difficult to analyze. Most people may do invoices all the time and still not really understand all the things that are happening, especially if we're selling goods and dealing with sales tax. So we're going to go back up top and just tab through everything, make sure that we populated everything. We have the tab to the email. We're not going to have any email at this time. Email is great if you do have it because you can send by email, and that's a great option directly to send right from there. If not, we're going to print it and save it as a PDF, and we can send it that way. Going to keep on tapping through. We've got the billing address. This would not be as important. However, we do need to calculate the sales tax. And so I'm going to record an address here just to make sure to do this. This is the same address for multiple customers. I know I'm just putting the address in there to calculate the sales tax. And note that the online version, if you're calculating sales tax, you have to basically do this. You have to use the automated system right now. There's no kind of manual system. If the automated system is working well for you, it's great because it does it all automatically. You can set up different states and all that is great. If you're doing it and you're just trying to work through a problem and set a fixed rate to see a standard rate, it can be a little bit difficult to do that. So that's what we're going to do. We're having a problem here. I want to make it so it's not restricted to one county and one state. We'd like to make it broad enough to work anywhere. So just note that we're going to put in an address to calculate the sales tax. To do that, you need to have the address here. You need to add the address for the business, and you need to add the location for the place that you're going to be having to pay the sales tax, in this case the franchise tax board. Once you have that, the system will be able to calculate the sales tax down here, and we will then be able to adjust it at that point. Until it happens, notice you can't adjust it, so be careful with the sales tax. If we're doing a service item, typically oftentimes we don't have to deal with the sales tax issue. Note that when we tab off of here, we scroll back down, the sales tax has now been calculated. So we're going to go back down there in a bit and adjust that sales tax, but let's keep going through here. We're going to say the date of this is going to be 012521. January 25th, 2021. That's going to be the time period we are working in, January of 2021. And then it's got going to a month later, 2/24, because of the terms. Then, of course, we have our item down here that auto-populated for us. So this is a form of guitar, a type of guitar that we've tracked through the whole process here. Here's the description, populated automatically. We got one of them. This is the sales price that we had to put in there. And the cost is still there. So it's not like we have an invoice that has both the cost and this amount, but it's going to use the cost to do what it needs to do with the cost, which is to reduce the inventory and record the cost of goods sold. We'll talk about that in a second. It also calculated the sales tax in accordance with the location. So it automatically did that. That's what the new online version does. I'm going to change it for purposes of our problem because I want to make it a nice simple sales tax calculation of just 5%. So I'm going to say it's the 777.4 times 0.05, which is 38.87. That's what we're going to use here. I'm going to make this 38.87. And it's going to say, you sure you want to do that? That's not what we calculated. And we're going to say, yes, we are sure we want to do that because it's just an example problem. I'll try to tell them that so that they know that they're not doing a bad job. And there we have that. So there's the sales tax. So now we're going to say that this is the sales price, sales tax, and the total amount is going to be the $816.27. So that's the full thing. Let's go through and just think through what the journal entries will do. Highly recommend doing this in any kind of form that you make. We're going to scroll up top and we're going to say it's an invoice. That means we didn't get payment typically, or at least not all of it. We are going to debit the IOU account then, which is accounts receivable. It's going to go up. The other side typically is going to be some kind of revenue account. We usually call it sales if we're selling inventory. The accounts receivable is going to go up by the full amount that the customer owes us, $816.27. The sales amount, however, is only going to go up by the sales price, the sticker price on the guitar, $777.4 in this case. The difference, $38.87, sales tax, that's going to go to the liability, sales tax payable. We then have the other side of this transaction, which is going to be the fact that inventory is going to go down by the cost of this GSB, guitar, Gibson SB, that we sold. However, it's not going to go down by $777.4. That's the retail price. It's going to go down by the cost, what we replaced this number with, which is what we paid for it. And the related account's going to be cost of goods sold, increase in the expense, decrease in the net income. So we're going to see that as we go through. I'm going to save this. I'm going to practice printing this one. Let's go and print this. And we'll print this invoice in case we wanted to send it out. Print preview. Here it is. I'm just going to download this item. And we are going to then name this item. And I'm going to give it first the date of 01.25.21, January 25th, 2021. Call it an invoice for music store stuff. So there we have it. I'm going to go ahead and save this information. So we have that invoice there. I'm going to close this out. I'm going to close this out. And now let's go and make sure it's saved. And then I'm going to close it. And let's go to our forms and see if it does what we think it should be doing. We're going to go to the reports on the left-hand side. We're going to type in that first report, which is the balance sheet. We're going to go to the balance sheet and select the balance sheet. Then we're going to change the dates up top. It's going to be 01/01/212, 01/31/21. That's January 1st, 2021 to January 31st, 2021. Then we're going to run that report. Now, the first thing that happened, we're not going to say that cash is not affected. What did we get? We got an IOU, we got an accounts receivable. Still an asset up top, so we're going to select the accounts receivable account, see what has been included there from our invoice. Here's the music store stuff, and there is the $816.27 owed to us. If we select that item, then we see, of course, the invoice related to the music store stuff that we have just created. Closing that back out, that's for the full amount, the 618 note. Scrolling back up to the top, going back to the main report, the balance sheet. The other side of that typically is thought to be the revenue account, which would be on the profit and loss or income statement. We're going to go to the reports in order to get to the profit and loss or income statement. Type in profit and loss. So here is the profit and loss report. We're going to change the dates once again from 01/01/21 to 01/31/21, and that's January 1st, 2021 to January 31st, 2021. Run that report. Then we have the sales item. Notice it's picking up in the sales area here. We probably should group all these together. We've been putting all the inventory items into sales of product income rather than the sales item here. So we have basically two of them. We could make that adjustment. We could go into the item and actually adjust that. And that might be worth doing to put it all in one area. So let's see if we can do that. I'd like to group it here. So in order to do that, we're going to go to the sales. I'm going to go to the items and try to change that item that we made. The Gibson SG is what's regulating where that goes. So we're going to go to the sales item to the left-hand side, and we're going to go to products and services up top. Products and services, and we're going to scroll up. I'm going to look for that Gibson GSB. Here it is. Here's the GSB. It's selling for $778.40, and the cost is $598. I'm going to select this edit and see where it's posting the sales item to. If we scroll back down, we got sales tax here, and we got the income account as sales. Now we might want to put that, since everything else has been going to sales of product income, let's see if we can pick that and see if it'll make that retroactively, meaning adjust the invoice or the amount that the invoice was using through retroactively after we already posted it. So let's save and close this. And then I'm going to go back to our reports. We're going to go to reports. We're going to go to the profit and loss and scroll to the profit and loss once again. And then I'm going to change the dates. The dates should be 01/01/21 to 01/31/21, and that's January 1st, 2021 to January 31st, 2021. Run that report. And there we have the sales product income. So notice it changed it and put it to this item now retroactively. We went back, changed the item, the driving factor of the invoice that tells us which account to post to, and it now grouped it in the same income account. Doesn't affect net income, but into a different income account. So here's the $774.40 for that invoice. If we select that amount, then we see the invoice that we have created. Scrolling down, here's the invoice. Now notice for $777.40, not the full amount we expect to receive of $816.27, the difference being $38.87, the sales tax. So let's see that $38.87. I'm going to close this back out. Look for that $38.87. I'm going to go back to reports. That's going to be on the balance sheet again. So we'll go back to reports, and we're going to type in the balance sheet. And we'll change the date once again on the balance sheet. So up top, we're going to say 01/01/21 to 01/31/21. There's our month, January 1st, 2021 to January 31st, 2021. Run that report. If we scroll down then to the liabilities section, we will find this California State Board of Equalization. That's who we owe if we're making the sale in California. If any other location you have, then you have to set up who you have to pay, the state or the province or wherever we are at, and that's what the liability or the payable will show up as. And we're going to go ahead and go into this item, and it's breaking it up in California in a few different ways. So these three items are related to that same amount. Actually, we're working on music store stuff. These three items will make up that amount. So let's click on one of these, and we will then see that that should add up. Those three items will add up to the $38.87 sales tax. So now let's look at the other side of this. The other side is going to be the fact that inventory is going down. I'm going to X out of that. We're going to go back to the report. So we'll scroll up to the top and we'll see the inventory. That's going to be an assets account. So if we scroll up, we see inventory. It's in the other current assets. We're going to select the 1,944 within the inventory. And if we scroll down for that, we should see that we have the inventory of, I believe it's this one, this 598 for music store stuff is the one we're looking for. So we'll select that item and see if that's the one we want. That's an invoice. And yeah, music store stuff here, that's the 816. Now the amount reported for inventory reduction wasn't 816 and it wasn't the 777.40, the amount we sold it for. It was some other number, which would be the cost driven by this inventory item. Not on the invoice, but driven by the invoice, and more particularly driven by this item on the invoice. So we'd have to look at the item, what the cost of the item was. When we create this invoice, it's using that item in order to reduce the inventory. So if we X out of this, that's going to be that side of it. One more thing, we're going to look at the cost of goods sold, the income statement side of this, the expense side of this transaction. We're going to go to the reports in order to do that. It's going to be on the income statement or profit and loss. For QuickBooks, that of course is the profit and loss. We'll select the profit and loss report. We're going to have to change those dates one more time. So we will enter the date range. So scroll up just a bit. That's going to be 01/01/21 to 01/31/21. There's our dates. We're going to run that report. So here is our report from January 1st to January 31st of the year we're working in, 2021. We have the cost of goods sold, the expense line item. This is the expense related to the guitar that we use in order to generate the revenue that we got. If we select that expense item, then we should be able to find this sale once again to music store stuff. There it is. Note it's at the 598 again. So if we select that, then we see the invoice, and there's not going to be anything on the invoice for that amount once again, because it's the cost that we had, not the sales price. So here's the sales price, not the cost. Here's the sales price plus the sales tax, not the cost. If we want to find the cost, we'll go ahead and take a look at the item. So I'm going to close this out and do that real quick. And then we're going to scroll up to the top before doing that, however, and go back to the report, the profit and loss. And just note the effect on the net income here then is going to be that sales went up by the full amount, which I believe was $816.27. And then the expense related to it went up by the amount of the cost, which was something less than that. I forgot what the number was. And the difference is the effect on net income, the net increase, the increase in the sales minus the increase in the expense. If we want to see what that expense was, where it's coming from, we'd go to the sales over here, and we want to check out the products and services. And we're looking for that GSB. So we're looking for a GSB. Here it is. And here's the cost, that $598 that was being used as opposed to the sales price.